Hello everyone, this is Keertana, Assistant Professor, Department of Commerce. Today I am here to present a lecture series on the subject Financial Management on the topic Cost of Capital Meaning. First we can see what is Financial Management. Financial management is the process of planning, organizing, directing, and controlling the financial resources of an organization because to achieve an goal efficiently, it focuses on utilizing financial resources to maximize profitability, ensure liquidity, and create long term value for stakeholders. Financial management applies to all type of organization, business, government and non-profit as well as personal finance. So next we can see what is cost of capital. So the cost of capital refers to the company incurs to finance its operations, investments or projects through either debt, equity or a combination of both. So actually cost of capital is an company's cost. It incurs operations, investments and projects either by debt, equity or a combination of both. It represents the return that investors expect from their investment in the company, which is also the minimum return of the company must earn on its investment to satisfy its creditors, shareholders and other capital providers. So the concept actually what is this? Cost of capital is based on company's cost, and also we have to satisfy the creditors, shareholders and other capital providers. So the cost of capital is used by companies to evaluate investment decisions and determine whether a project or investment is worth pursuing. It is an essential component in financial management as it helps in the decision making process related to financing, budgeting and risk management. So the cost of capital is used by company to purpose of evaluating investment decisions and to determine whether a project or investment is worth pursuing, and it is also essential component in financial management to helps in decision making process related to financing, budgeting and risk management. So in the first point, we have seen that cost of capital refers to a cost of company. Also, we have to satisfy shareholders, creditors and other capital providers. So in second step, we have to use the cost of capital using investment to evaluate investment decisions and determine whether a project or investment is worth pursuing. So we can determine the project or investment's worth based on cost of capital only. Also, it is an essential component in financial management as it helps in the decision making process related to financing, budgeting and risk management. So the cost of capital helps in first thing is decision making process, and the next is which will be related to financing, budgeting and risk management. So next we can see the components of cost of capital. There are several components involved in determining the cost of capital. In this, cost of debt, cost of equity, weighted average cost of capital. So cost of debt, that is KD, the interest rate paid by the company on its borrowed funds. So the interest rate paid by the company, which is company will be borrowed funds from other financial institutions. So the cost of debt will be calculated by the interest rate paid by the company on its borrowed funds. And the next is cost of equity, which is KE, the return required by equity investors such as shareholders for their investment in the company. So the cost of equity in the sense the return required by equity investors like shareholders and investments of the company. And the next is weighted average cost of capital. So this is the average cost of the company's capital weighted by the proportion of debt and equity in the company's capital structure. So the concept is average cost of company's capital, that is weighted by debt and equity in the company's capital structure. Hope this you will have understood. Next we can see the classification of cost of capital. So actually the classifications will be lots, but in our concept the six classifications are there. In the first one, cost classification by nature, and the next one is cost classification by functions, and the third one is cost classification by behavior, and the fourth one is cost classification by management decision making, and the fifth one is cost classification by production process, and the sixth one is cost classification by time. So we have six classifications. In that, first one is by nature, second one is by its functions, and the third one is by its behavior, and fourth one is by management decision making, and fifth one is production process, and by the last is by time. So the cost will be classified in different categories. In this, six are main concepts. Hope the video was useful and understandable. Thank you.